Okay, here we go, guys. We are live. This is Stock Talk Thursday. Big one today. Wow. This is actually, as I always start these broadcasts out, I say this is exciting. But today, man, I think something huge is happening out there. I always want to give a few minutes off the top of a broadcast to let everybody get into the class. Today, we're going to be talking about Gamestop. We're talking about it here. Everybody is already talking about Gamestop. I was talking to some of the marketing people at Tradeway, and I had to say, I'm being asked about GameStop everywhere I go. My phone is blowing up with people. Blair, tell me what is going on in GameStop. Can you please tell me what's going on in GameStop? Explain to me what is going on in GameStop. So here's what we're going to do today. This is Tradeway Stock Talk Thursday. We're looking at GameStop. We are looking at hot or not. What is going on in this? What I'm going to tell you today is a few things. Number one, what is going on? Why is GameStop exploding the way it is? We're going to look at the chart. I'm going to show you the movement of this stock on the chart. We get some pretty wild activity going on after hours in this chart. So it's not over yet. It's not calming down. So this is going to be interesting to look at, explaining why does the stock do this? How is this happening? What are some other stocks this is happening in? And ultimately, what does this mean for the future? What is going to happen? Of course, there's some big news items around it we're going to look at as well and give you my thoughts. Hey, what I want to help you understand the most, yes, what is happening? Yes, where do I think this can go from here? But number one for me always is, what are the risks? What are the risks? I know a lot of you guys on here tonight are thinking about getting into this stock. I'll tell you this already. Robinhood, as many of you I'm sure have heard of Robinhood, many of you probably have Robinhood. Over half, as of this morning, I don't know how true this is now, as of 4:03 Pacific Standard Time, over half of Robinhood users have a position or had a position in GameStop. Okay, so definitely a very, very interesting circumstance. Now, you can see comments are already popping in there. We're on Facebook. We are on YouTube. Some of you will be watching this by recording, but we got plenty of people on live tonight. So because I like to know who you are, where you're from, and any questions that you may have, I gather there are probably going to be a lot of questions on here. If I know the answer, I will give it to you. Okay, so go ahead and use that comment section to say hello. Tell me where you're from. Pop your questions in there. I will be jumping back and forth between right here and over to the chart. So I may not get to them right away, but I will get to your questions. I see there's a couple in there already. So I'm going to go through some stuff, and then I'll come back and we can look at what questions maybe were not answered already. Yeah, some comments in there. Jeffrey's always with us. Howdy, howdy. Good to see you on here, Jeffrey, Elijah, UA10I12. I see you there, Jim, Tom. I said Elijah. Let's see, Katie. Katie's on here. Katie Huber, COO of Tradeway. So, you know what's interesting? Alton Davis, I see you there as well. Lots of familiar faces. Keep popping your names in on the comments section there, because we love to hear from you guys. And we've got a good sized crowd tonight. There's been look, last year, the market did a lot. We're going to jump over to it in a second. It did a lot. There was a lot of market news. Last year was a pretty phenomenal year for market activity, to say the least. But you know what? I don't think I've even had as many questions about what happened last year as I've had about GameStop. And really, I think what a lot of people are thinking is, should I be buying this? Should I get in? Where is this going to go? Should I hitch my wagon to this star? Because this thing seems to be going to the moon, maybe further. So that's what we're going to look at today. So first thing we're going to do here is I'm going to go ahead and show you the GameStop chart. Okay, so let's get that up on the screen. Make sure we can see it here. Here we're looking at the S&P 500, but heading on over to GME. All right. Just to show you here, GameStop closed out today at $193.60. Okay. It dropped 44% on the day. Now that's from the open. So for those of you who haven't been following along with us, just to give you a quick overview of what we're seeing on this chart, these price movements are so big that most of the data back here, I'm zooming out. These candlesticks used to look big. You can't even see them. It's just flat because the chart is trying to accommodate the movement that we've had over here. So it's pretty wild. But keep in mind, this didn't just drop from 264 today. It actually went all the way up to $485. Now, let me put this into perspective for you. I know a lot of you have already probably seen this, but I want to start from the ground up and just give you guys an idea. Let's just go back here to, say, December 22nd. Okay? December 22nd, the price of GameStop opened. In fact, you know what? Just for kicks, why don't we go, say, 28? Because today would be the 28th. Okay? So we'll just go an even month back. The price of GameStop opened at $21.31. Okay. Now keep in mind that the market is actually closed on the weekends. So we're just looking at trading days here. So I say this has been a month, but it's really just been 4 weeks, right? 4 trading sessions, or 4 weeks of 5 trading sessions. So we're looking at about 20 days, 20 days. And we opened at 21.31. Where did the high go today? Well, I actually have to keep squishing my screen just to get there. And I'm not trying to just be spectacular for spectacular's sake. I don't even need to try because it's one of the craziest things that's potentially, ever happened in the market. And I'm going to talk a little bit in a minute here about how technology is really coming into play here. And it's setting a groundwork for something to happen that's never happened before. And I think it's connected to something that we talk about a lot at Tradeway, which is the mission of helping you guys understand that the markets are more accessible to you and me, which we call retail traders, a term we're going to use continually today. It makes it more accessible to you and me because of the technology and because of the low cost of entry compared to what it used to be, which the further back you go, the higher it would have costed us to even be a stock trader. Okay, so that's a big part of what's happening here. This is spectacular because it's totally unique in this time and season. $482 and approximately 50 cents. So what did I just say? $20 a month ago. Today, the high was $500 and it dropped from the open 45%. From the high, the losses were catastrophic. So that's why I say you need to understand the risks here. And after hours, you can see on my screen right here, it's up 76%. There's a reason for that. I'm going to get into that as well. So first of all, let's talk about this for a second. I've shown you what's happening on the chart. Donna says, can we ask about some other stocks that have had significant changes? I will mention a few others, but for now, I'm going to stick with this just for a minute here, and we're going to explain. Okay, so what is happening? Okay, you've read articles, maybe you've heard something, or really you just saw it's in the news, but you're not really even sure what on earth is going on. So I'll tell you what's going on. Basically, I tell everybody who asks me, do you want the short, you want the medium, you want the long answer? What's really happening here is there is essentially an online forum for those of you that are not familiar with Reddit. Okay, it's a website. And they've got topics. Really, it's an online forum for people to go and really have what we call a subreddit, which is just basically it's a forum that's attached to a specific topic or a specific idea or a specific conversation. Okay, there is a subreddit on this webpage called Wall Street Bets. Okay, Wall Street Bets. Essentially, what this has done is this has created a platform for retail investors. I said I was going to keep using that term. So what am I saying? Retail investors versus institutional investors. So if we look at institutions, we're talking about the big players, really, the mutual funds, the hedge funds, the investment banks. big money that are coming into the market, spending millions, in some cases, billions of dollars. And that is the kind of money that can substantially move prices in the market. Historically speaking, you and I, the retail investors or traders, right? Not institutional, but retail, that's what they call you and I. We have not really had the ability to come in and really move the market in a significant way, okay? In fact, over the years at Tradeway even, that's been a reality we've still continued to see, where for the most part, the institutions are the ones we call the big boys. They essentially, think of it this way, they are the wave, and we are the surfer trying to catch the wave. We don't create the wave, we just catch it. We ride it and we get off. That's what we do. But what is different about GameStop, and one of the things that is so fascinating, is that on this community online, they have amassed enough people who are willing to be aggressive enough. Now, there's no way of knowing for sure that there are no institutional investors jumping on board this action. But by and large, this is a sort of an unprecedented thing happening here, where retail investors are choosing to go in on this together, and it's raising the price of the stock. So that's a pretty interesting thing. But I will say this as well. They're not only choosing to just go in on a stock, but they're choosing GameStop. Somebody asked me this earlier today. Well, why GameStop? Of all the stocks out there, why GameStop? Well, as somebody mentioned in their question, are we going to look at some other stocks that are having a similar activity? There are some other ones that this is happening to, but specifically, they're choosing stocks that have significant short positions. Short positions. Now, I talked on a previous broadcast about what shorting stocks is, but ultimately, shorting stocks is a speculative strategy for sophisticated investors, meaning they have a significant amount of capital, they have experience, because it's a very, very risky strategy. But what they do is they come in, they borrow shares of the stock, and they sell them. So they sell them at, say, $20 with the expectation that the stock is going to go down to 15, but they still have to pay back the shares they borrowed. If the stock is to drop to 15, what do? They buy them back at $15, and then they'll supply them back to the one they borrowed them from. Well, wait a second. They sold it for 20 and bought it back at 15. Doesn't that mean they pocket $5 after that whole transaction? Yes, it does. If their speculation is correct and the stock drops, then they pocket the difference. Shorting the stock means that they sell the shares, which is actually going to put downside pressure on the stock. So why is that connected to GameStop, and why does that matter? Because what these groups of investors, retail investors, have done on something like Reddit and on free brokerage app like Robinhood, which I know you guys are asking questions about this, what they've done is they have said, we are specifically trying to go after the short sellers, because if they can drive the stock up enough, then they can actually put pressure on the short sellers. Because remember what I just said, the short seller has a speculation that the stock is going to go down. So let's use easy numbers again. He thinks it's going to go down from 20 to 15, so he can pocket the $5. But what if it goes up to 30? Oops. Now he's still got to replace the shares that he borrowed, but now it's going to cost him $30 to buy it back when he initially took in 20. He's at a $10 loss. How high can it go? What's the maximum amount it can go up? Well, there is no maximum amount. Theoretically, the potential for loss when you short stock is infinite. So these guys are big players. They got big money and they've stayed in for a significant amount of time, but this is something that they could not control. And they said, we have to get out of the position. Some of these big players have incurred tremendous losses because of what has happened here. So not only was this group able to lift the price of the stock, but they were able to create what's called a short squeeze, meaning It was squeezing the ones that had short positions. It squeezed them so much that many of them exited the position. They said, we can't take any more losses. We have to get out. Well, what did that do? It meant that they had to sell the stock. Okay. They sold something and they had to cut. It's what we call covering their shorts. And when this happens, I said they had to sell their stock. They had to buy back the stock. They had to buy back the stock, which is covering their shorts. And when that happens, that meant another layer of tremendously large buying happened, which then only brought the stock up even higher. That's when things really started to move. Plus, you've got people piling in when it moves up. What do you think and feel when you see a stock going up the way that it has been? Well, like most people, you think, I wonder if I should get in on that. Well, a lot of people have been piling into the stock. And of course, the more we hear about it in the news, the more people want to get in on the stock. The more attention is coming in, the more people are coming in. So every day, like I said, people have been asking, and that's what's happening. There's another dynamic happening here where a lot of people, even I've read some institutional people, are getting in on this now. They're buying significantly out of the money options, such huge volumes of out of the money options. You say, Blair, I don't really know what an option is. Well, that's something we can teach you here at Tradeway, and we'll talk about that later. But I've done a previous session where I talked a little bit about options. For today, you don't really need to know what it is if you don't know. I'll just tell you this. They are buying a lot of options, which is a financial instrument that gains or loses value based on the movement of the stock. Okay, so it's connected, but it's different. And because they're buying so many of these options, they're actually forcing market makers to buy more GameStop stock. So now market makers are having to buy more stock, and that is also increasing the price. So the speculation here is huge. It's huge, but there's some market mechanics at work here that are creating a very, very unique, and in some ways, opportunity, but risks as well. And of course, it's creating a greater conversation about what does this really mean for us? We've already got lawmakers, people in government starting to pay attention. Now I see some comments in there I'm going to get to in a second, where GameStop actually has had such a wild ride that I mentioned, at least as of this morning, half of the users, which is a lot of users. I think they have 1.3 million users or something like that. Don't quote me on that, but they've got over 1 million users for sure. Over half of them had a position in GameStop, at least of the time I read that this morning. So Robinhood comes out and says, we are going to halt trading, okay, in the sense that we, retail traders, will not be allowed to buy any shares. We can sell. If you have a position already, you could sell, but you can't buy any more. Okay, wait a second. So you're telling me that I can get into the stock 2 days ago, and now I can only get out of the stock. I can't add to the position. Or if I'm not in it already, I can't get in now. That's where we've been at all day long. And the conversation has been interesting. Because some people are saying, and you've heard this from individuals, people on Twitter, from certain politicians and lawmakers saying, hey, there has to be some regulation. There has to be some control. I'm going to tell you in a second here a little bit more about where that perspective might come from. But I'll answer some of the questions first. The other side of it is saying, no. Listen, it's called Robinhood. So we should be able to get in there. Wall Street's able to buy. They're able to sell. They're able to drive up the price. How come we can't do that? What are some of the similarities there? What are some of the differences there? And it's interesting. And I'll tell you honestly, the jury's still out for me on what's happening here, because it's a really interesting and exciting opportunity for people to come together and say, you know what? There's a tremendous opportunity here in the markets. On the other hand, you know, the GameStop, as of yesterday, now it's significantly higher than this when it was, you know, I'll go back to my chart here, when it was getting up into this area. Yesterday in this area where you can see it closed, GameStop, the price of GameStop's, the value of their shares was actually trading at 76 times the value of GameStop as a company. We talked about this a few weeks ago on Hot or Not when we looked at Tesla. Tesla at about 42 times the value of the company. That means the share price is so astronomically beyond what the company is actually worth that it's beyond detached from any company fundamentals. Now, stocks are on a free market. They can buy, they move up by supply and demand. So if the value of those shares to investors is high enough, we can drive the stock higher, and then the valuation of the stock as a whole becomes higher than the company. A lot of people assume that those things have to be very closely tied, but they don't actually have to be very closely tied. Speculation on the future value of a company can mean that it goes up. That's what happened in Tesla. You saw it tremendously. Why don't we go over there for a second? You saw Tesla over this last, this run from November 20th that's $400. It's more than doubled in that time. So that is an incredibly huge move. And I said a few weeks ago when we did a broadcast, it was trading at 42 times the evaluation of the company. Now, people were speculating on Tesla because they said, I believe in the future of the company, right? We believe, now this is not the whole reason, but this is a big part of the reason. Investors have said, it is worth this price to me because I believe that it has a lot of room to grow and expand, that this is a very healthy, stable company, and we expect growth, growth, growth. Go back to GameStop. That's not what's happening here. Nobody in their right mind expects that the growth in GameStop over the next X amount of years, whatever time frame you put on it, is going to come even remotely close to the kinds of prices that we're seeing in here. And some argue that for you and me, that's a tremendous risk because we can't sustain this evaluation, that the company ultimately just isn't worth that. But what is being shown here is that if people are willing to buy the stock, it can become incredibly detached from a company's valuation. And then the question is there some kind of regulation that should happen on that? Furthermore, I'll say a few more points and then I'm going to go to some questions. Is discussing a position in an online forum, I talked to a few Tradeway coaches about this earlier today just to get their opinions, is discussion in an online forum amongst retail investors, should that be illegal? Is it legal? I've heard a lot of comparisons of retail investors to Wall Street. Say, well, Wall Street's able to drive the price. How come we're not able to drive the price? Well, Wall Street isn't allowed to collude with one another on an online forum. Now, I'm not saying I've come to a final conclusion on that. I'm simply saying that is one of the things that they aren't allowed to do. They're not allowed to pick up the phone, call each other, and collude on a position. Now, they can communicate through the chart, and they do. But there are some restrictions that they have. Are those restrictions going to be applied to retail traders? Well, we don't know. But what we did see today is GameStop saying, okay, traders, you can't open new positions, which is a risk that a lot of you guys had if you were in positions today or would have had if you were going to get into positions. As of tonight, the CEO of Robinhood has said under, quote, certain conditions, some people will be able to purchase stock tomorrow. Now, this isn't just Robinhood. We've seen Interactive Brokers, TD Ameritrade, Charles Schwab. Many of them have put restrictions of different kinds on GameStop. In some cases, they just raised basically the amount of capital you'd have to have for certain kinds of leverage where you borrow money to buy more stock. It can be very, very risky. What if you bought this stock today at $500 approximately? Okay, it closed today at 193. How much money did you put in there? Because you lost over half of it, well over half of it. Right? So these are the risks we're looking at in here. So let's take a look at some questions. I think that'll guide a little bit more of our discussion here today. UA10I12 says, isn't it? And I'm going to put this on the screen. Isn't it illegal to stop trading on certain stocks and only to purchase? Okay, so a couple things. Number one, stop trading on certain stocks. Now I'll differentiate your question here because there's two things you just asked right there. The first one is, can they stop trading on certain stocks? The answer is yes, they can. Now, it depends on exactly who you mean by they. The SEC has what we call implemented what we call breakers. Okay, breakers. I talked about this in the last session. Might have been the session before, and we saw this last year. Okay, we saw this on the S&P 500. We saw this on different stocks. They dropped so far, so fast in some cases, or the opposite. They went up so quickly, so far that we actually tripped what's called a breaker. Now, these breakers are set on certain percentages. If the stock goes up a certain percentage, it will halt. Usually around 15 minutes of trading will be halted, okay? It gives an opportunity for people to take a breather, step back, and detach from potentially some of the emotions, either euphoric buying of the stock or panic selling of the stock. And this is put in place just to control some of the emotionalism in the markets. David Mitchell likes to say the markets, the stock market is emotional, while the bond market is more intellectual. Now, that requires a lot more explanation to fully say what he means. But what I'm saying here is the market is very emotional. Investing can be very emotional. We need to learn to really detach our emotions from that. And that's something we also train people how to do here at Tradeway. That said, those breakers help control that. Now, there's usually another breaker, okay? If it continues to do that specific action, whether up or down in a wild fashion, it can trip another breaker, which usually halts the trading in the stock for a little bit longer, okay? It might be 30 minutes or something at that case. This can happen to the overall market as well, not just an individual security. But beyond that, trading can actually be halted for an entire day. And we did see that happen multiple times last year where stocks were halted for an entire day because it was just too wild. We've seen crashes that weren't even necessary to happen. And they weren't even necessarily attached to fundamental reasons so much as the emotions began to take over and these breakers go off. And then it's able to stop the sell-off or the buying, whatever the case might be. So in that sense, they are allowed to stop trading. Now, your second question, and really what I imagine most of you are wondering, can a broker come out and just say, you know what, you're not allowed to buy that stock? Now, that's a question mark. I'm not a securities lawyer, okay? Tradeway, we work with them. We're an SEC registered firm ourselves. Obviously, that is something that we're familiar with, but I'm not an SEC lawyer, so we're going to be interesting to see in the coming days just what this ends up being. You'll notice if you do a quick search, there's actually some bipartisan support right now from some names in politics that are saying, okay, we need to have a hearing about this, and specifically not just about the movement in GameStop, but specifically about their blocking in your question here. Can they just say that? Can they do that? Can they bar us from doing that? Especially since Wall Street banks and such were allowed to purchase the stock today. They weren't barred from it, but Robinhood users are. Furthermore, just to say, I told you some of the things I was going to talk about as the risks. Well, one of those risks is Robinhood. People ask me about Robinhood because it's free. And it's really revolutionary. It's not only free, but it's caused other brokers to lower their prices because it was a disruptor in the industry. A lot of people like to use Robinhood. Here's the thing with Robinhood you got to understand, and I'm not knocking on Robinhood, but I want everybody out there to understand some unique risks. Remember, amateurs chase profit. Professionals manage risk. Everybody's after profit. That's why we do what we do. But there's a very different mindset and approach. Amateurs chase profit. Professionals manage risk. The platform you use has risks. Online has risks. There's always risks in investing. And two things I would note about Robinhood is, as far as I know, I've seen shortages, where people go on and Robinhood's not loading or it shuts down for the day. We saw this happen last year. In fact, there were a couple of days that had some bigger news items regarding that because a lot of users were angry. But I don't think there's much of a recourse for users that have that problem because there isn't a large customer support option, as far as I know. Somebody out there can correct me if I'm wrong. When it comes to Robinhood, okay, now brokers we use at Tradeway, there's people on the other end of the phone, okay? We specifically work with Tastyworks, and Tastyworks I've had to call before and they have quickly and rightly addressed any problems I had. So that's not just a plug. I'm saying that's a risk. That's a risk on Robinhood's part. Furthermore, there is an agreement that is signed specifically when you sign up for Robinhood, and it basically says if anything happens, you don't really have recourse. Okay, you can look that up online and give you the exact details of it. I have a Robinhood account. Okay, truth be told, I've never done any buying and selling in my Robinhood account. They give me my free share when I signed up, and that was the end of it. But you do sign a waiver essentially. And that's something that we need to pay attention to because that's probably going to come up in the coming days. So there are unique risks. I'm not saying that people haven't done well. I'm not saying that people haven't found it convenient, but those are some things that you're going to want to know. Selling like this, Elijah says, could this bring the sector down? Any thoughts? I mean, it depends on, it just depends on what kind of selling we see here. I mean, really, we've got to look at this specific sector. And, if we go over here, we're looking at retail trade, but electronics at appliance stores. So we'd have to go over and see, is this really dragging that down? Those are absolutely massive movements. I would wonder how heavily GameStop is weighed into those sectors. So that would be an interesting thing to look at for sure. But you may see that happen if you've got something in that sector and this wild trading is happening. You might be noticing that some of the positions you were looking at or have in that same sector, remember I just said electronics and appliance stores, and that's something you can pull it up online. You can also do it in your charting software, depending on what charting software you use. TC2000 will do that. You might find that there's some risk. There's some market risk because of what's happening and how wild what's happening is. Jim Skinner says, I'm sure so many that got in lost a lot of money today. Well, that's entirely possible. So this is what I want you to understand. This is part of the benefit of having training. At Tradeway, I say this to people, we don't want to know just enough to be dangerous, okay? Because investing and trading can be a tremendous financial opportunity, but we've got to know something. We've got to know something. Even the foundation of what we're doing. How do I make an informed buying and selling decision? Even on this, listen, I'm telling you what, you give me 15 minutes with you, okay? You give a Tradeway coach 15 minutes with you, and we do these live broadcasts every week. I've covered some of this on our Market Monday broadcasts, okay? That's on YouTube, that's on Facebook, that's free, okay? You give me 15 minutes, and I'm gonna help you feel twice as confident or more on where should I get into a stock and when is a stock just not good to get into. I'm not saying I'm going to teach you to predict what's going to happen because we cannot predict what's going to happen. Anybody who tells you that they can, well, they're actually guessing and telling you that they know. But we can find where the advantages are. And that's what we teach you how to do. So let's go back to the question here. It was said, I want to make sure I get Jim's full name on here. Jim Skinner says, I'm sure so many got in, lost a lot of money. Well, what if you just heard about this from your buddy, from a friend, from a colleague, from whoever, and you jumped on to Robinhood and you just jumped in this today and you got in at $430, okay? You didn't know that, granted, I should say this, I already mentioned, they said we couldn't buy into the position today. So perhaps you did it yesterday or earlier today before that restriction came out. You'd be incurring significant losses. At one point, look at this low, guys, $112, 480 down to 112. If we're not careful, and I know this is happening, listen, I know this is happening because I've heard it in so many other stocks and I've read the articles. Somebody goes out and puts 50 grand or whatever, a large sum of money. That's subjective, I realize, but a large sum of money. And they don't necessarily know what they're doing. They're just throwing it in there and hoping that it goes up. And I don't want to see people get hurt doing that. We didn't know that they were going to lift this restriction tonight. Obviously, there was a lot of backlash online. Robinhood is defending their decision, saying that they did this in order to meet requirements by the SEC. If we do have a hearing, we'll hear more about that in the coming days. But for you as an investor, you had a tremendous drop. And it's very difficult to know what's going to happen. And when it's very difficult to know, are we going to continue to be able to buy and sell? Is that going to shut down again? Because if it shuts down and you can't buy, guess what happens? People who are in it go, if other people can't buy the stock while I'm in it, then the chances of it going up are significantly decreased. So anytime you're in a position, if they stop the buying again, the downside risk is tremendous. And at that point, it's just a burning building. It's a matter who gets out the front door first, which is why you saw this drop here today. That could be reinstated at any time. I don't know that, but that is the risk. So we've got to understand that here. Somebody asked, can we look at some other ones? Oops, not Best Buy. I know BlackBerry was one of them as well, and people who got in here yesterday have basically lost half the value of it. Okay. So it's just, you say, well, Blair, what about somebody who got in here? Yeah, absolutely. I'm not just saying there's only losers. These stocks are screaming hot. There's certainly been some winners. In fact, I've read about them online. There's no question. I'm not saying yes or no. That's for you to decide. My job is to equip you to feel more confident because, as you know, those of you who've been joining me on here every single week, what's my job? What is my job? What is my hope for you? I say it all the time. I'm on here so that you can win. Win. Now, what does that mean? You say, you want me to win all my trades? Listen, everything in that way that you need to own finances is I manage risk. So that's why I say that. So we'll head back to GameStop. All right, let's take that off. Moving down through the questions. I love this. Get some right here in these people. Let's see. Eric says, Patricia sent me, I've been watching the markets all day. Reddit stuff is coming across here. Sorry, let me go ahead. Looks like I'm not able to drop that off of there. It's essentially like this gang is sort of just going after Wall Street and I guess you could call it an insurgency. All righty. Donna says, can we ask about, oh, that's something I already looked at. Ron, that's what I'm looking for. How in the world do you exit a trade if you were lucky enough to be in at the right time, but with a huge bid-ask spread? I guess market order would still be good, perhaps, but still would like to know the best way to exit a trade like that with a nice profit. Let's go ahead and pop that up there. I'm just going to double check here to make sure. All righty, guys. Looks like we had a connection issue there. So I'm going to go ahead and get this guy off of here. That. All right. So let's get our chart back. And I would just say, Katie, I know Katie's out there. If any of our Tradeway people are out there, just let me know if you have any issues on your end. If we freeze up or anything, I want to make sure we get these folks this information. So we've got a lot to cover because I know we got a lot of questions here. We're getting to the 40-minute mark here. So let's look at this. Ron has got a big question. How in the world can I exit a trade if I was lucky enough to be at the right time, but a huge bid-ask spread? I'm going to explain that in a second for those who don't know. I guess a market order would still be good perhaps, but still nice to know the best way to exit a trade, that one with a nice profit. That's a great question. Now, we go over that pretty extensively in our step one course. Here's the deal. when you've got incredibly high volatility, okay, you can see these big bid-ask spreads. For those of you who don't know a bid-ask spread, anytime you buy and sell a stock, you're going to have two prices. Okay, you're going to have two prices. If those two prices are very far apart, we always say the market maker is going to try and get you to take the one you don't want. If you're buying, he's going to try and get you to take the higher number. If you're selling, he's going to try and get you to take the lower number. And if he doesn't like the price, he will not fill it. Now, Ron mentioned a market order. You could use a market order, but if you do that, he's going to fill it, but you're going to get the worst price you can out of that spread. The opposite, or the alternative to that, is getting a limit order and trying to go halfway and negotiate with them from there. Okay, that's the best you're going to be able to do, but that is one of the risks of being in stocks like this. Okay, so that is definitely an interesting question, and I know a lot of people are probably experiencing that. Let's see through these. Melody says, it seems like the same thing happens when the casinos find out you're counting cards. That's an interesting point. I mean, they kick you out, right? They kick you out and they say, you can't play like that because it upsets the integrity of what they're doing. No, maybe it upsets the cash flow of what they're doing. See, the house no longer has an edge. And that is how a lot of people are seeing this. And I think that's a good place for us to go at this point. What does this do for the integrity of the market? If everybody in the country can just say, well, let's all get together, and on Thursday, we're going to buy this stock, and on Friday, we're going to buy that stock. Pretty soon, the integrity of the market, in that they're detached from any fundamentals of the company, and ultimately, it's going to completely change how the market works. That's a very interesting question. Of course, some say, well, that's what that's what the hedge funds do. That's what the big boys do. And again, for me, the fundamental question there is the big boys don't communicate directly like that. They're restricted from doing that. What are the kind of rules that are going to be put forth on how we can continue to trade if this kind of communication occurs? How do you even regulate that? What does that look like? There's lots more discussion to be had there, and Tradeway might be doing some things in the coming days where we look at that. Certainly, this is going to continue to be an interesting story as time goes on. If it wasn't for Robinhood, we wouldn't be trading with cheap fees. Retail can change things. 100% true. That's competition. That's competition. Software, it's all completely changed because there's retail trading that's competitive. There's companies that are competitive. So is this just free market? Just let it run, let it do what it does? Is that how we should do it? Or is there a measure of regulation that's going to create healthy market movement here? That's what we're going to find out what they decide in the coming days. But that's why I say this is so remarkable. I'm going to say two things just to make sure I'm getting the main point across. There's lots we can talk about here. Number one is, if you're looking at these in the coming days, I want you to understand the risks. I want you to understand the risks. I want you to understand what is a good situation for me to be trading. When should I be getting in? When should I be getting out? What are some simple tools that are built into a brokerage account that help limit my risk? We can teach you how to use those tools. If you head on over to tradeway.com/memberships, okay, we're going to put it in the comments section, tradeway.com/memberships. We have memberships that range from sessions where I'm going to be with you just like this, to access to our community pages, to one-on-one coaching. We train people on how to do this. We also teach you how to do this with options. So there's some tremendous advantages to being able to do some of these things with options. But number one, I want you to understand the risks. Number two is that this is really just, the door just cracked open here, guys. This whole situation has just brought up a brand new discussion. It's basically said, hey, here we are, we're the retail traders, we're not going anywhere, and we're actually pretty powerful when we come together. How do you want to respond to that power? Okay. However it plays out, I want you to be a winner and not a loser. And that means you need to be able to differentiate between price action and price edge. Price action, anybody can see. Price edge comes from training. That's what we do. Hey, from San Marcos, Texas, one of my good friends over at Tradeways from San Marcos. Looks like Tasty Trade opened it back up today, and I know a few others did that as well. Francis said you're cutting out pretty badly. Thankfully, I think that's been resolved here. So, who buys the GameStop stocks if somebody wants to sell? Well, we have to keep in mind that there's somebody called the market maker. Remember I said earlier, some of these people on Reddit, they're buying tremendously large amounts of call options. I didn't talk about what a call option is, but it is a device, an instrument in the stock market that's connected to the stock. The long short of it is that these market makers have had to go out and buy the stock because they need to have sufficient positions in order to do what they do with these call options. So that said, the market maker does what? They make the market. They are the in-between. They are the go-between that keeps the market moving. And that's where some of these complications are coming in, because they have to be in the middle to buy and sell the stock. If somebody wants to buy it, it's their job to provide stock for them to do so. So they are the ones in the middle who are buying the stock if somebody wants to sell it, or they're selling the stock if somebody wants to buy it. Jim Skinner says, I'm fine with them changing things so this doesn't happen, but it needs to benefit us both and not just them. And I think that's a balanced perspective, Jim. I mean, ultimately, that would be the ideal I think we want to go for, where the market doesn't crumble into this utterly volatile Wild West. And yet at the same time, exactly, how do we balance the privileges of this market? Because we now have access in a way that we've never had before. So that's interesting. Melody said on right, however long those restrictions were in place, it was just us. You know, if Goldman Sachs wanted to get out there and buy into GameStop, I didn't see anything today. Now, I have limited information on the activities of Goldman Sachs to be sure. But I didn't see anything that said that there was any kind of restriction towards institutional investors that may have wanted to get in on this. And you got to believe that with this kind of market movement, some institutions or big money out there were trying to get a bite of the action. I'd be pretty surprised if they weren't trying to get a bite of the action on some of these stocks at all. Because, hey, listen, you got volatility, there's an opportunity, and an opportunity is an opportunity. They know how to get in and get out of these opportunities in a safe fashion. And they've got the capital to support the risks that they take. So that is definitely something that we need to keep in mind. Jeffrey, I see your comment there. Jeffrey's Tradeway member joins us every single week. We had a bunch of people on here. Let's see. Yolanda says, do you think the Robinhood app will be taking off? Now, I don't know if you meant taken off or taking off. Do I see them shutting down the app? No, I don't see that, at least not where we're at right now. Do I see it taking off? Well, that makes me think about the fact that Robinhood's app is actually going to be going public. They're going to be a publicly traded company, which is interesting. That will be, as a broker being a publicly traded company, they're not going to be the first, but it'll be a very popular stock, no doubt. That's not to say it's going to go up. I'm just saying it'll be something people pay attention to. Yeah, Melody, I see your comments there. I mean, the changes in the market it'll be interesting to see. It'll be interesting to see what that means. And I think it's something we need to watch for in the coming days to see how this goes. Keep in mind, and I'll finish with this, they specifically chose these stocks because they've got significant short positions and they saw certain opportunities. They haven't gone out and done this with Apple yet. They haven't gone out. We'll see where this goes from here. But they're choosing these stocks for specific reasons. So it's not even at the point right now where they're necessarily going to be just doing this to every stock they can think of. because of the significant short positions here, we've seen that short squeeze that I talked about at the beginning. So let me say this. Listen, is this stock hot? Well, I got to tell you, my decision, my judgment on this stock being hot or not today is that you got to know this. What time of day is it? Right? That's the question. Is it hot? Well, I don't know. What time of day is it? Because look earlier today, and I'm going to finish with this, folks. We were up at $480. You couldn't say that stock's not hot just because there's massive risks. Doesn't mean it's not hot. It was hot, but it ain't at $500 anymore, folks. It's at $193 right now, at least at the close. We're looking at a pretty significant increase after hours, but still significantly lower than the highs today. So was it hot? Yeah. Did it close hot? No, it did not. It did not. And for me, the risks here for folks who really don't even understand some of the basics on how to protect their downside position, I'm going to say not so hot, not so hot. There's opportunities to be sure, but it's definitely a risky game to play when you're sort of just betting on hysteria. And something like today showed us that there is actually regulatory risk in this as well, not just market risk. So something to keep in mind. We're going to continue to follow this in the coming days. I don't think we've heard the last of GameStop as of tonight. Tomorrow is going to be a wild day. Listen, folks, if this is really exciting you, I would tell you, don't be at a spot where you know just enough to be dangerous. Head on over to Tradeway/memberships. Take a look at all the memberships that are right there. You can come in and join us. It's low monthly fees. You can come in, have access to our entire program, myself, many other Tradeway coaches as well. We'll teach you how to do this stuff. We teach you how to make confident buying and selling decisions. Move from being an amateur to a professional where you are a consistent trader. People can get in and make money on one thing. Consistency is about knowing what you're doing so that if you do have a good position, you know how to repeat that over time. And that is the skill set of trading. With that said, thank you everybody for being on tonight. If you have any questions, go ahead and post it there. I know some people are going to be joining us on the recording. You can also post and we'll get to your questions on there. Head on over tradeway.com/memberships. And we will see you later. Thanks so much, everybody. Bye now.